Me again, everyone. Well, me again. There we go. Me again. So last time I gave you my background with my morning show, The Breakup. Before all that, I worked at Kraken, and I worked on the original Wyoming bank license. So, and then before that, I worked for the Canadian Senate Banking Committee. We did an amazing study on Bitcoin in 2014. So I've got some experience in banking. Nothing like these folks, though. Nothing like these folks. So we're here to talk about Bitcoin's role in traditional banks. We're talking about the secure integration of Bitcoin within this moribund, failing, difficult system that grew out of the limitations of human beings and the money they created. So, look, we got to just start with what it means. What is a traditional bank's limitation to securely integrating Bitcoin? And Caitlin, I got to start with you because you've been on this for a long, long time. Caitlin, what are we starting with here?
Well, the biggest issue for the U.S., and this is U.S. specifically because it's not true of most of the rest of the world, is that the limitations that the Fed has put on banks with regard to their technology platforms has forced them to be backwards. So you've heard me joke that the U.S. banking system has a horse and buggy back end, and fintechs have built a Ferrari front end, and those two things don't always go together very well. And it is absolutely the Fed's fault that it forced banks into using old technologies, and that's where they still are. So here comes this cloud-based crypto piece, and we just saw with the Evolve challenges the issues with having a combined on-prem and cloud architecture for a bank. That's a real challenge.
Mm-hmm. Yeah, and I remember, remember the Brian Brooks when he was controller of the currency. When he said he sort of gave a blanket approval to the U.S. banks to get involved in custody, but they never really embraced it. And now they didn't embrace it because, indeed, there's technological limitations.
Yes.
And those technological limitations have to be overcome. How are we doing it, Miles? How are we overcoming them?
Yeah, well, slightly different than Kate's challenge is that we built something from the ground up in the cloud. Maybe we got away with it because we're headquartered in Puerto Rico. But from a technological perspective, we started with a clean slate. So that really helped us a lot. And I think that not being bound by legacy systems has been an advantage for us. And so, but it's not just the technical solution. That's to some extent commoditized today. It's getting the personnel around it, the mind share, all the way from technical implementation to compliance, sales, marketing, and understanding how do we actually create an offering that incorporates Bitcoin in this example that everybody understands, right? And so there's this massive, massive learning curve that has to take place inside of the organization.
What about the mendacity, though? I mean, it's definitely there. If you look at, they limited these people to participate, and then we look at Choke Point 2.0, and we saw that if you did take them for their word in the summer of 2020 about what it meant to custody, what it meant to offer Bitcoin services, well, you might be Signature, you might be Silicon Valley Bank, and you might be finished right now. You might be done.
Suicided by the regulators. Yeah, absolutely. There is no question that the U.S. regulators have gone far outside of the limits of the law, including the lawsuit settlement for the first Operation Choke Point. And almost certainly the FDIC has abused that. One interesting point, though, for Miles, you said you built native. So did Custodia. We are 100% cloud. The interesting piece is it's the connectivity to the Fed that is so backwards. The Fed has a small list of approved vendors. Okay, and what do you think the oligopoly on that small list of approved vendors did? They didn't innovate. It's public information that one of the regulators whose information was made public in our lawsuit did not know what an API was.
Mm-hmm. An API.
There you go.
Well, that might have been the person, because when I was at Kraken, I remember the Kansas City Fed. They probably sent it to you too. They sent they have a UX and a UI. They're like a commercial, like a normal bank, and they sent us the onboarding. And I remember looking around the website, and that was when the TARP loans were still there. And I'm telling you, it was a payday loan site. They had flashy $25 million, 10 minutes, no reasons, and you could just do it. But they never gave it to you, and they never gave it to anyone, right? They kept saying, we're going to create these secure rails. You'll be able to go in and out, no problem. Never happened.
It never happened, right? The Fed did allow API-based banking cores a couple of years ago, and that was a big change. But if you look at the APIs, again, they're quote-unquote APIs, right? We took a look at the big three providers' systems, and what they called APIs were really not APIs. So it's still very backwards, the traditional financial system. A lot of folks will ask the question, why are you bothering? This is the biggest challenge in Bitcoin right now, is the connectivity to the US banking system, because US companies have to be able to pay their employees in dollars, have to be able to pay their vendors in dollars. Eventually, and you were at Kraken working on the bank, as you know, Jesse used to say, you build a bridge because someday you don't need it and you can blow up one end of it. But the reality is it's probably a couple of decades in which we will need the bridge to be able to go back and forth between the two sectors, the traditional sector and the Bitcoin sector. And our true north is to build so that neither system harms the other. And unfortunately, because of the decisions that were made by the management teams and also by the regulators prior to the meltdown, prior to FTX, the two systems did hurt each other. And unfortunately, we got caught up in that with our applications.
Yeah. Now, it's not all bad. We have advantages. So it's not just about them letting us in. It's also about the competitive advantages we get from them having their own troubles, their own psychological issues, and what we're able to build on the side. So tell me, how do you take advantage of this market dynamic? What can we offer that they just simply can't stop us and we're going to win? What do we have?
I think we got to look at this from a perspective of the traditional being bridged to a new world, and it's difficult to cross the bridge. There will be challenges around this, but fundamentally there is an opportunity to look at a new world in the Bitcoin standard. And I think I speak more from a private wealth banking standpoint. I think the first crack will go in that direction. So private wealth banking is something that will fundamentally get disrupted, especially at a new age digital private bank, because the opportunity will be driven by demand from the wealthiest individuals. I mean, today, look at this slide. The numbers are like 1.3 trillion out of 500 trillion of global wealth. We are nibbling. We're just starting right now. And it would be fair to say that people who are operating and building on the Bitcoin side don't have the entire wealth. And the people who have the wealth are still not in Bitcoin. So there is an amazing opportunity to kind of rebuild how wealth is managed by allowing the wealthiest individuals to kind of enter into the space. And that's where I think a big role will be played. And it has to be done in the right regulatory realm. You have to work with the regulators. Fortunately, we are lucky to have, from our side of the world, FINMA and MAS, very progressive regulators in that sense, the Swiss and the Singaporean regulators.
Yeah, we've watched in admiration of over there. They don't do what they did here and try and sue Bitcoin Magazine over a Fed Now T-shirt, right? We don't.
That was hilarious.
It was the best. Huh? What I often say is only 10 lawyers could do something so stupid. One lawyer would never have done that, right? If people don't know, Bitcoin Magazine was served a cease and desist last year by the actual Federal Reserve. So they've only been involved in like 10 pieces of litigation in their entire history. You've got 2 or 3 of the cases right here on stage with you. So they don't do it often, but they did it then. So I don't think Moss is doing that at all over there, right?
Very progressive.
They're not worried about T-shirts, right? They're not worried about T-shirts. But indeed, the capacity. Now, I like what you said about the wealthiest. I would add to them the energy companies, because sort of one of my visions of the future with indeed wealthy people who want to be able to measure their wealth in something that makes sense. I often think of Bitcoin as like Celsius. It's just a measuring stick that brings meaning to a whole field. I continue to believe that energy will be priced in Bitcoin, and that is hyper-Bitcoinization. When energy itself is referenced in Bitcoin first, because it's the only thing that makes sense, we're kind of there, right? But I agree, wealthy people understanding their wealth in Bitcoin, energy companies understanding the energy market in Bitcoin, probably going to happen faster than a bunch of remittance payments and all that stuff. But nevertheless, the let's say, risk management side of banks putting this on their balance sheet today is still there. We've seen some companies take a chance here, right? We've seen major companies, we've seen Tesla do it, we've seen others do it, we've seen MicroStrategy do its play. But this idea of putting it on the balance sheet, eventually banks are going to have to do that too, right? And how do we get there, Caitlin? How do we get traditional banks thinking of Bitcoin as part of their treasure?
Well, it's got to start with the regulation. I mean, I know in our case, our regulator doesn't allow it. So when I file my call reports, if I say I have 500 Bitcoin on my balance sheet, I'm going to get a phone call in a matter of minutes. So first of all, the regulators have to recognize that Bitcoin should be able to be carried on your balance sheet. We currently can't do it. So we're in this, I mean, your famous ruling, that not even de minimis amounts of digital assets are being allowed to carry on the balance sheet. So first of all, we need a regulatory change, or some body needs to recognize that this is okay, because it makes it very hard to operate. You know, in our case, we run a custody business. Well, to operate the custody business, you need to have some access to digital assets because you have to pay gas and similar types of fees. And so, yeah, regulatory change with regards to how a bank can hold digital assets on their balance sheet. That's probably the first part. We would do it today if we were allowed to, but we're not allowed to.
Yeah, and I guess the ETF, even getting rid of the securitized lending of the ETF itself, that it was worth zero in collateral, I would say was another, like that eliminates the possibility of ETF being a major component of a balance sheet. Am I correct in that?
Well, certainly the underlying Bitcoin, the SEC actually did something right. They prohibited the rehypothecation of the underlying collateral for the ETF issuer. So you're not seeing leverage at that base layer of the ETF ecosystem. You're definitely seeing leverage at the ETF unit level, though. That can be prime brokered. There is a value, but it's like a volatile stock. So it's not going to be able to be leveraged a lot because the volatility is so high. However, a lot of Wall Street banks are very, very interested and are actually participating in that market. There's a very interesting piece that the SEC got dead wrong, though. They thought they were screwing the industry in saying that the ETFs have to be cash creates. Okay, and here's the problem. If Bitcoin trades 24/7, 365, so the ETF units have to be created through the US dollars, right? They can't be created through Bitcoin itself. If the ETF units could be created through Bitcoin itself, just Bitcoin to ETF unit, then you could do it 24/7, 365. However, it has to go through US dollars. US dollars are only open during Fedwire hours. Okay, so here's the big problem. There is a huge risk, and I warned the Fed of this. There is Herstatt risk all over Bitcoin trading markets because you have to go to the US dollars to settle it in order to create the ETF unit, and that is only open during Fedwire hours. And so all the transactions that are happening in Bitcoin after hours and on weekends are just piling up in unsecured credit exposures among the players in the space.
Is that something like the old CFTC weekend gap? Is that the same concept?
About what? Sorry?
The CFTC had the trading gap over weekends. There would be a different rate, and then it is
the same concept. If we had 24/7, 365 US dollar settlement, which Custodia is working on, stay tuned, we could take a lot of risk out of the system. But it's so funny because the SEC, in its attempt to try to kill this industry, threw sand in the wheels by saying it had to be cash create, so everything has to go through US dollars as an intermediary transaction to create an or redeem an ETF unit, which means it cannot settle except during Fedwire hours. And what did that do? When the SEC ended up having to throw in the towel and allow the ETFs, it threw a whole bunch of risk onto the banks, and it's not small banks, it's the global systemically important banks, because they are the clearing banks for all the big ETF issuers and market makers. So there is actually a Bitcoin risk. Remember I told you our true north is do not have risk in either of the two ecosystems from the connectivity between the two. The way the SEC and the Fed have the Bitcoin ETFs trading and cash creates is creating risk in the system. Do not be surprised if there is a problem. I warned the Fed that there was bank run risk at Silvergate and Signature. It happened, and I warned them about this as well, and they've done nothing that I can see.
What does the risk look like played out?
It would be a default, a cascading default. When Herstatt Risk, which was a German bank in the foreign exchange market, when it defaulted, it created cascading defaults throughout the entire financial system, and the solution that was created was CLS Bank, continuous linked settlement. So you were actually having continuous settlement of US dollars versus other foreign currencies, and that prevented it at least reduced the counterparty credit risk in time and in size, because you could settle trades faster. We need a CLS equivalent for Bitcoin to US dollars, and it's the bank regulators who are, through their own decisions, creating risk in the banking system, and I am now publicly warning the Fed about it, even though I privately warned them about it a couple months ago.
Well, I mean, the Hong Kong... there you go. Yeah. The Hong Kong ETF, of course, with the Bitcoin does create a potential tension there that this could even be spurred on deliberately by someone else.
Sure, absolutely it could. The smart way to allow the ETFs would have been to allow the physical create. And then you would have 24/7, 365 markets. But by that decision to force it through the intermediary of a US dollar transaction, it was crazy. It created risk where there need not be risk.
Mm-hmm. Now, we can talk, I don't want to go too much into U.S. regulatory stuff because it's not just the U.S., but of course so much is happening. We've got the political side and everything that's going on there, but the Supreme Court, of course, has had some pretty interesting pieces. Chevron, I've been following the Jarkissi versus SEC case from the very beginning because I recognize that. If people don't know, basically you can't, in the American system, the legislative branch and the judiciary have to be separated, and the executive. The idea of the SEC having enforcement internally is what has made the situation where normal lay judges don't understand the law, right? Which is really the Jarkissi logic, is that if a judge can't even understand it, you did something wrong, and
right.
This is the actual issue. So it looks like we do have a mandate to change everything in America depending on what happens next. Is the rest of the world waiting on America? Can Singapore embrace? I mean, because everyone stands in awe of Singapore's capacity for, not just paying their bureaucrats, but actually getting really smart ones. We can't seem to do that. We get Gensler, all right? We get Gensler all the time. You guys get real people, and do they see this change? Is this what the rest of the world is seeing, that America is about to do something one way or the other, but it ain't going to be the same?
I think there's already in action an alternate that was done in Hong Kong, where your BTC is in-kind redemption. That's a flavor to the ETFs already right there. Mm-hmm. And that was done as a challenger, I would say, to the regular ETFs in the US. So I would put it this way that, the world across is figuring out what they can do with Bitcoin, and fundamentally how can they integrate it in their ecosystem, and based on their intrinsic nature, of currencies. For example, if I pick up the example of Hong Kong as well, right? You look at, it follows the UK model of allowing commercial banks to be able to issue their own currencies, right? Mm-hmm. This is a world that we might go back into after nationalization of currency in a very future world. I don't know whether it's going to arrive now, but you're revisiting that model where banks, like Hal Finney said, right? Banks have a big role to play. It's there, Hal Finney said it, right? And where fundamentally, if Bitcoin has to scale, if a regular person out there, any wealthy individual has to interact, they might interact it via a claim on Bitcoin, or they might directly interact on Bitcoin. It really depends on the profile of the person and the goals that they have and how they want to kind of interact with Bitcoin. So I think the opportunity is there. I'm using the word opportunity for all jurisdictions to look at this as a way to step up their game, especially in the banking world. So you look at 1950s or 70s, I think, where banks were struggling across the world, and Citibank came out with the game of Forex pairs. They reinvented the banking system with a new financial model. So I think that's the opportunity that all banks have, and they should. We're at a stage where we're 15 years into this, and ETFs have been approved. We are far more mature into the Bitcoin cycle. It's about structurally looking at the laws, like you said. Do we need to understand and update them? Do we need to look at the processes of the banks as well? I mean, you can switch on the technology. The technology is there today. You can switch on the technology to offer Bitcoin to your customers, irrespective, retail or wholesale. But the processes of the banks, the operators, they have to kind of also upgrade in terms of the training of handling. The customers have to understand that psyche of a deflationary asset. So you're talking about a complete game changeover. And I think the best equivalent analogy that I've heard is the antibiotics analogy of elongating the human life in 1920s with antibiotics. I think Bitcoin will elongate the corporate balance sheet. You wouldn't see the symptoms of fiat that typically we see, where out of 10 companies, 9 die. You will see a lifespan increase for corporate balance sheets when they move to this Bitcoin standard.
Does that future life, because you mentioned the Hong Kong banks, and I've always loved the idea of Hong Kong, it's stable coins, right? It's the Hong Kong dollar is a US stable coin, and the banks themselves mint it, which means they require actual dollars on the balance sheet. They can't fractionally create their stablecoin. That's my understanding, right? They require everything in reserves, and then they can issue their Hong Kong dollar, which is a US dollar proxy, right?
Yep.
I don't know the answer to that.
Yeah, and then the banks actually print when you go to Hong Kong, the actual specie is issued from the bank itself, as it once was in America.
Yeah.
That the bank actually has to have the money in order to mint, just like Tether has to have the dollars to mint the stable coin, and USDC has to have it. Now, is that when you think of extending a bank's life, right? American banks do nothing like the Hong Kong institutions. They don't mint money. They forgot all that.
I think something that Kate and I definitely agree on is that if you're in this space and if you're running a digital asset portion of your bank, you better be 100% reserve.
Right.
We have been from inception. It is against all models of every other bank, that exists on the earth, really. And so yeah, I mean, whether you're issuing a stable coin, which is really just a blockchain embodiment of a ledger account, or whether you're just managing a deposit account in an extremely volatile environment, you better be 100% reserve. And I think there's maybe, I don't know, maybe it's Custodia and FV Bank that are 100% reserve in the United States,
and
then no one else is.
And that's it.
But that's a hard pill for people to swallow, to understand. How do we go from this fractional banking system that's existed from the beginning of time to a bank that actually has your money?
Can we not say that there's sort of a psychological frame there? Because, I think of banking in America, and most of what we think of banking is based on the prestige that these institutions held for so long. Their power is directly correlated to the prestige they had. Now, since 2008, bank prestige is, you go around New York City after 2008 and you say you're a banker. It ain't what it was before 2008, right?
Yeah.
We have a generation of the best and brightest going into finance because it was the highest paid job, and there was a lot of prestige that came along with everyone knowing you got paid a lot of money. The best people in the world were in that job. Now, I think we all felt watching all those banks a couple years ago go belly up that were associated with our business 2 years ago. Look how fast the prestige came back in our environment. I don't see anyone here embarrassed about what they're doing, right? No one here is embarrassed about working in this game. I don't think anyone in traditional banking, unless they're so drunk off the fiat money they don't know what's going on in the world, but most of them it's not really there anymore. How much of a benefit is the enthusiasm when it comes to role in traditional banks? Like, I've been to these places. You leave one of those offices with the C-suite, you get a bunch of people saying, "Can I get a job?" Right? That happens every time. Now, what I see is our industry has this enthusiasm and this energy, and I think a lot of the power base is in enthusiasm and energy and what people are interested. Is my assessment accurate? Can you speak to that? Is this a thing that you observe as well?
It is, and a lot of banks want to get into it, it is unethical and probably illegal what the SEC did, but it is a fact that the SEC is giving exemptions from SAB 121, which is the punitive accounting standard, to certain large banks.
I saw that.
This is the Bloomberg article. Not a lot of people know about this. Last night someone was sharing it, and they didn't even know the SEC was giving these exemptions. It is nuts. The SEC did not comply with the Administrative Procedure Act in creating SAB 121 because they didn't put it out for public notice and comment as required by law. And then the brouhaha came. Congress voted to override it. Then Biden vetoed it, and Congress couldn't override his veto. And then the SEC leaked to Bloomberg their friends, their certain large banks, are getting exemptions from SAB 121 while the crypto industry still has to comply with it. Okay, so now what does that mean? It means the banks are coming, and we wrote a blog post on Custodia's website about the meaning of that. Banks are coming to the custody business. We were chatting backstage. Banks as legal entities are superior in the United States because they provide an exemption from federal bankruptcy process. Federal bankruptcy definitely creates a preference for the shareholders and stakeholders of the estate over the customers. The bank receivership process favors the customers over the shareholders. Right. Really simple. So you want, as your counterparty for custody, you want a bank as a legal entity. So now the traditional banks are coming, but then we're back to what we were talking about at the beginning of this stage, of this session, which is that the traditional banks don't have the tech stack. Mm-hmm. And you start to see what kind of happened with the Evolves of the world, where you're mixing cloud-based services with on-prem services. And initially, the Evolve hack, it looked like, to me, they thought that was a hardware problem, which is why they didn't, because so much of their system was on-prem, and they didn't have an understanding that they had been hacked. And obviously, we're living the impact of that.
Speaking from the point of view of a bank, do you worry about, is that something that is in your risk assessments when you're talking about what's going on? Because indeed, the minute the Office of the Controller, Brian Book's piece came out in 2020, his letter, I said, this is going to turn all of the custodians into a beauty pageant.
Yes.
And they're going to be able to get whatever they want because you've only got so many suitors and only so many dates. And now, is that something are you ahead on that?
I think it is coming.
Yeah.
Yeah, I think going back to an earlier point, though, is that in relation to Bitcoin, the number one, I don't know if it's the number one, but one of the highest values that banks can do is bridge the on-ramps so that more people get access through not only fiat to Bitcoin channels, but custody. In FE Bank, somebody can acquire Bitcoin and hold it in custody today. I can't do that at Wells Fargo. I've been banking there for 35, 40 years. I can't even send a foreign wire out of there. But I think one of the major roles that we can play that is something we're executing upon today is to give more people access to exposure to Bitcoin in a safe custodial environment. That's probably one of the biggest roles that we can play. And I think that as the regulation becomes more clear, we can adapt more services around things like collateralized loans and other things that will come out of owning Bitcoin.
Well, lots of things can come out of owning Bitcoin, but not more time on this session. Okay. It's lunchtime, everyone. It's lunchtime. Please, a warm round of applause.
Thank you.
The Bitcoin Conference. We started with a dream to build a community focused on Bitcoin. It all started in 2019 in the heart of San Francisco, the first major Bitcoin conference in years that kickstarted a revolution. And then Miami, a place where enthusiasts, developers, dreamers, and innovators could come together to make Bitcoin better. It has been an amazing 5 years and 8 conferences, thanks to all of you. Bitcoin Conference has become the largest premier global Bitcoin gathering in the world, leading hyper-Bitcoinization. While Miami was incredible, it was time to set the stage for Bitcoin in a new city. So we took the conference on the road. Nashville, Tennessee was the obvious choice, a city known for music and freedom. Next year, the conference is hitting the road again in search of the next global stage. We are headed to a new city next year. With hyper-Bitcoinization right around the corner, we have no plans to take the foot off the gas. Find out where we are headed next. Scan the QR code and be at the main stage for the big announcement.